Hey, what's going on, XRP Army? Welcome back to the channel. Today, here we are, the daily charts for XRP. And as we can see right now, we are up 1.46% on the day. We had a dip, a pretty gnarly dip, to say the least, this afternoon, this morning, all the way through yesterday. And now it has recovered right into our trend line. So we're taking a look here. Remember, this is the trend line that broke yesterday, and it was officially confirmed yesterday, just a heads up. Today, it's pushing back into that trend line, so we are getting a retest of that trend line. Is it going to break back down, or could we have a reverse break here? We can see that we have a hold section right here, this line currently sitting at 45 cents, 45.76 cents to be exact, as we can see here on the chart. So what we're going to do is we're going to jump into these charts, and we have an awesome video for you. We got a lot of great stuff today. So let's check this out. The US has declared war on crypto. Here's how we fight back. Jpmorgan CEO threatened by disruption in payment system. Kevin O'Leary says, this is a great article we're going to take a look at. Genesis director to step down and move into advisory role. Another crypto CEO stepping down. We just covered this yesterday about how bizarre it is that all of these people are stepping down all over the place. And US lawmakers propose amending cybersecurity bill to include crypto firms reporting potential threats. We're going to jump into all of that today. First and foremost, though, the most important part, we're going to take a look at the charts here. We're going to look at XRP today on the weekly, daily, and the 4-hour, and we will jump into Bitcoin and Ethereum as well. So here we are right now. Bitcoin or XRP made the massive run. It broke to the upside of our trend line with breaks indicator here. And then obviously it did get to the top, created on the RSI, what is called a shark fin, because it looks like a shark fin, right? And so when the shark fin pattern appears, usually there is a pretty severe rejection off of that section. And there was. And so as you can see, it also hit our 1100 moving average, and it's been dropping ever since. But yesterday, boom, what a crazy battle back here, guys. Take a look at this. On the 4-hour charts, it came all the way down. It actually came to our level here. Let's see exactly where do we get to. Let's go ahead and draw a line there. We'll do the horizontal line here for you guys. Boom. It got all the way to 41.68 cents. Now, since then, it has boosted back up, and it actually freaking made a nice rally here in the last couple of hours. So as we can see here, this is the 4-hour candles. This last 4 hours was a beast of a move. As you can see, it got us all the way up to basically that 1100 moving average. Again, this time on the 4-hour time frame, it did bust above that 50 moving average. Right now, it is having a slight pullback, literally in this hourly candle that we're sitting in right now. So we'll see right now, does it hold support above our 50 moving average on the 1-hour, or do we have potentially a small pullback? Now, what would be interesting is if we take a look at this now, since we have our most recent swing low, if this was a swing high, where could price potentially return to? Well, it'd be right here in the golden ratio zones. And then that gives us some pricing here to take a look at. So the pricing on that would be right here. The 786 gets us back to 42 cents. The 70 gets us to 43 cents. And then the 618 gets us to 43.23 cents. Those are just potential ideas. But now, if you guys remember, let's go ahead and get rid of that now. We did yesterday do our Heikinashis. If you guys remember, yesterday we took our Heikinashi candles. Let's actually here, I'm going to clear this whole chart, because that way there's no distraction. We see exactly what's going on here. So yesterday on the 1-hour charts, we took this candle right here and we boxed it off. Okay. And then this is a 1-hour candle box. So we'll do the blue color. Okay. So this is where we said yesterday. And so this video right now, we're recording on the 1500. You can see down here the 1500 candle. Yesterday, we recorded on the 1500 candle as well. So let's go back in time. Where were we yesterday at the 1500 candle on the 1 hours? Boom, right here. Okay, so we were right here, and we drew this box. So right there, that was going to be our support line, if you guys remember, right? We're like, oh, look at this. It's holding support on this box right here. Could it hold support? it ended up breaking down a couple hours later, but that's okay. So this candle was our candle. Boom. It ended up breaking down. We covered that yesterday. What we did do is create some new data here for our charting. Now, for some of you guys watching this, again, this right here, we're covering the smaller time frame stuff. We're also going to cover the weekly for you more long-term holders. We're going to cover it all, right? So as we talk about all the time, by the way, I'm not a financial advisor. This is not financial advice, just financial entertainment here on the channel. What we do talk about, though, is some of you guys out there, you love to do more than just put money in, dollar cost average, and hold. Some of you guys are traders, or at least you would like to learn how to do trading. That's why I cover all of these different scenarios for everybody. So these smaller time frames are more of your day trade scenarios versus your long-term bag holders, which we'll talk about as well. So again, that break, that trend lines with breaks indicator, it did signal yesterday. We did talk about this, how it was falling, and we did talk about how it likely could come to the 30 level, which it did hit down there, right? But look at this, it even kept dropping farther than that. So really interesting how heavily that down move was. So now let's go to our 4-hour charts here, and we'll take a look. As we can see right now, we did run into our 4-hour 1100 moving average. To the upside, we do have a zone here. That would be our next level of resistance on the 4-hour, and that level is 47.20 cents. It's like 0.4720, 0.4720. And then the top of that level, which would be a support, does get us to 48.82, which I'm sorry, would be also a resistance, right? So price were to continue this rally, which it's in a nice rally, it's getting some momentum here. If it runs into this, then gets in the box, creates support, gets here, gets out of that, that would be a fantastic scenario for all of you bulls out there on XRP. Now, some of you guys may be wondering, okay, well, that's cool. What about to the downside? Because we did talk about that too. And we covered this scenario right here where price likely could come to this scenario. Boom. Okay. Because remember, yesterday it had tapped there already. We were battling back up. It actually ended up breaking below there even, and then rallying up over the next consecutive hours, which it's had a really strong day, right? Because it came down early on that day, and then boom, it's had a strong liftoff since the drop of that day. And then if we take a look over here, where could we go below that? Well, we do have a drop that could get us into this zone here, and these are 1-hour boxes. So let me color these blue, and I'll cover these with you as well. So that is the 42 cents, 42.90 really. So 43 cents is the bottom of that support. If it comes back there, if it can hold there and rally back, if we have any sort of pullback, which we're kind of experiencing right now in this current candle, but if it were to not hold, and then the pullback does finish itself off, getting down here to 39 cents, 39 cents is a potential drop zone for XRP. If it continued to drop there, the next real scenario that could happen is running into the moving average here of 38 cents and going from there. So we would have to go on a much larger time frame if we're going to talk about like how deep could it go. And if we talk about how deep could it could go here, and we'll go ahead and we'll turn that one to yellow. And that's 34 cents. 34 cents would be the immediate support level. If it kept dropping below there, then we're looking at 32.41. All right. So that is a couple of things. So let's recap right now. On the Heikenashis, we are showing bearish continuation. We did have a break of structure of the trend lines, and it is starting to move to the downside. However, today's candle did a heck of a job battling all the way back up and now turning into a little bit of a hammer style candle. So if we look here on the weekly charts, we have 4 days and 2 hours left. For those of you guys that are long-term holders, what are you thinking about? Well, since we did break these territories here, this was the section that we needed to break for this bullish momentum. We needed to break that 44.88 cents zone. So 45 cents, turn it into a support. And if we turn that into a support, which as you can see, the wick did come down and retested that zone. There is a tiny bit of a fair value gap or an imbalance left in there to fill. So you can see right here, there's a tiny bit left. So it likely could come and at least just test that 39-cent range, right? Because then it would come and clear all of that out. And then it would have a lot, like it would be basically coming and refueling for another leg of the up move. It has already cleared out this whole entire fair value gap here with the giant wick that it left right there. Now it's coming to fill this fair value gap. And then all that leaves, we talked about, this is really exciting. There is nothing below. There's no fair value gaps down here on the weekly charts. There is one to the upside, getting us back up here at 67. Now, if we drop to smaller time frames, then yes, there is a few fair value gaps to the downside, like down here at 40 cents, even down here at 36 cents, and then also at our daily supply and demand zone, that 33, 34 cent range. All right, so that pretty much covers the charting of XRP for the day. And as we talked about, we have some zones that we're in right now. So right now it is literally on a support zone, 44 cents and 71. So 4471. And then below that, the support, so if it keeps on dropping, the ultimate level of support on that small time frame zone, 4422, then it would run into another support. So this is really good because as it made this battle up, it's creating a lot of resistance for it to move down. So it's going to be a struggle bus for it to move down unless the whole entire market just dumps for whatever reason. But as you can see here, price has extended over outside of the volatility band. The market baseline here, which is the average price, is starting to curl up on the 1 hours, and volatility is curving out. So showing that there's expansion coming in. So lots of interesting scenarios here. If we're looking at the top down, weekly wise, it did hit the Bollinger Band on the outside. So weekly, it likely could be having some sort of recovery, which we're seeing, right? This candle is recovering right now. It's red. On the daily, we did blow all the way outside the volatility band and we were overbought. So that's why it started crashing with the shark fin there. And then when we get to a smaller time frame, the 4 hour, very bullish here, right? So that's broken through. It's on its way up. Background's green. It's on its way up to the 50 level. Right now, I mean, obviously it could have a continued drop here. It didn't officially get down into the 30 level. It only got to 32. So could it come and tap down below there? Yes. And then if we drop to the 1 hour, the 1 hour is definitely overbought, but it's not all the way up at 70. It's just outside of the Bollinger Band. So we could have a small recovery before the move to the upside. Before we jump over to Ethereum and Bitcoin, let's take a look at this article here. The US has declared war on crypto. Here's how we fight back. Crypto and the enemy at the gates. For years, advocates of decentralization, broadly conceived as both a technological innovation and a wider social aspiration that privileges the distribution of power, have argued that the distributed structure of blockchain technology renders it all but unstoppable, even to those who would willfully shut it down. But recent actions by a number of US authorities have demonstrated the federal government is all too willing to give it a try. So what we've talked about forever, the creators of Bitcoin wanted free monetary, right? Free monetary system. It was going to be inflation proof, all kinds of different things. Well, it started to work. And it started to work really, really well. And it got really, really exciting. So guess what had to happen? The major powers that be had to step in and crush it like a little bug if they could. But there's a war going on and no one knows who's going to win that. So it is exciting to be a part of that battle. In August, the US Treasury placed the privacy protocol Tornado Cash on its list of sanctioned entities, thereby forbidding its use to service or receive transactions for any reason. Doing so in violation of these sanctions is punishable by fines or imprisonment even in the United States. And last week, the SEC slipped language into the lawsuit against the ICO era YouTuber that were it to become precedent would place all Ethereum transactions under US jurisdiction. So that is not good. That would be that would be horrible and awful. Very easy way to just get rid of Ethereum. And I mean, obviously it would still be working and still do its thing, but the whole idea of Ethereum will be crushed because the United States government will basically have total and complete control over it. Also, last week, the CFTC sued a DAO for the first time, arguing that any token holders who participate in the governance voting could be culpable of the DAO's actions. In fact, just yesterday, the CFTC served subpoenas to the entity of Uki DAO by submitting the papers through its online help chat box. So literally, this Uki DAO had a chat box, something like this, right? And the freaking CFTC submitted their papers through that chat box. Now, is that a legal way of actually like serving somebody papers? Probably not. Probably have to physically serve somebody. But I know that they're probably going to try and do that. But I don't think that's legal jurisdiction that they could do that. And remember, we are going to jump into Bitcoin and Ethereum charts here in just a moment. So it's not an exaggeration to say that this is the most aggressive line of regulation by enforcement that we've yet seen from the US authorities. And it feels like a warning shot right across the bow. The idea that decentralization immunizes a technology, practice, or a set of contractual agreements from prohibition is simply not the case. And the US government is trying to prove it. We've known for a long time that there would come a day in which the semi-utopian, radically libertarian ideology that drives so much of the cryptocurrency narrative would come face to face with stone-faced regulators. And that day, friends, is here. We are about to find out in a very tangible way what happens when an unstoppable force meets an immovable object. And I've been talking about this with you guys. I know some of you guys think it's funny when I talk about how like the New World Order, the Illuminati, and monetary consumption and the Federal Reserve and all these things are against us as people. I don't think that they're like, well, I mean, I guess they are against us as people, but what they're really against is us having any freedom. If they control your money, they control your governments, they control your food, they control your health, giving you shots. All these things they control, giving you no power. So they have always the most power. So while it might be easy to panic at such alarming developments, especially if you've ever used a mixer protocol like Tornado Cash, where you'd put your money in there, right? So you could send it to Tornado Cash and it would spin it out with a basically untraceable, or participated in a governance vote, or performed any other innocuous action that might soon be implicated, it has never been anyone's benefit to do so. And while the next impulse might be rage, that is neither helpful nor desirable in the moments of crisis. Go scream at the sky to get it out of your system if you need to, but put it behind you as soon as possible, because we actually have to, instead of screaming and fighting and crying about it, we have to take action and make sure that our voices as crypto is heard. And like I've said before, if you're watching this, you believe in crypto, you're a crypto evangelist, so you need to be speaking to everyone about crypto. It doesn't have to be about one specific coin. Don't be a cult member, right? So XRP Army, I love XRP. I love all of you guys. But the fact that some of you guys are like, "Oh my God, you sold a token," or like one of our thumbnails says, you know, Shiba or even Shiba Inu, sell now, even though it's just like you could sell now if you wanted to. Or for example, my video yesterday, XRP, get out now, right? Why? Because freaking XRP was crashing. There was a reason that we were covering that information. You are obviously grown men and women. Make your own decision. I'm not a financial advisor. That's just financial entertainment and opinions that we're talking about. But this is important to understand these things. So it's time to do what Americans do when they decide to change the rules. It's time to organize. The US political system is an opaque, intransigent beast that favors the status quo and makes radical change very difficult. Nevertheless, it contains key mechanisms that allow determined movements to make a difference if they really, really put their minds to it. While we'll be diving into these in greater detail in future pieces, here are a few things to get started. Call your senator or congressman, tell them that you actually like crypto, right? Donate to crypto happy people that are running for office. Run for office yourself. The problem is a lot of people running for office are these 80, 90, 100-year-old people trying to be, run our government with their old thoughts and their old ways. Most of them can't even use a laptop, let alone want to use crypto. So you have to understand that. Engage your community. Keep an eye on the prize as well. All right, and here we are on TradingView again, but we're now at the daily charts for Ethereum, still trading in this sideways range here on the daily between this section here of $1,348 and $1,237. So basically that $1,000 or that $100 range right there for Ethereum. Yesterday, it did pop out and run right into our resistance line. That's been a resistance once, now twice, rejected off there. If this box fails to hold on the bottom side of 1237, we could see a return to the 1100s or even the $1,000 range for Ethereum. Positively, though, to the opposite is true. If it starts to make a break to the upside, we could see a great return to 1600 to 1700. Those are the daily ranges for our Ethereum charts. Now let's take a look at Bitcoin and we'll jump into some more of that news there. Bitcoin, as you can see right now, also trading sideways, similar in that same situation where it has its little daily range here. Right now, it did break out to the upside, and it's going to hopefully reclaim this level of 19,184 as a support and then make its way up all the way up to the daily level here. That would be the 21,173, which it will experience another resistance. It'll also experience some sort of resistance here at the 50 moving average as well. That's at 20,532. So keep that in mind. Now, conversely, to the downside, we do have this ultimate level of support here at 17,567. If this gives way, the box that it's in, this 18,619, if it breaks to the downside, we could likely see a return back to this level down here of 17,567. However, looking at the charts, we do have a bullish divergence that has formed. We had a bullish divergence here. It ran up really nice. Now we have a bullish divergence here. It's got a delayed reaction, but we may see a reaction, which will be nice. And then if we turn on our fair value gaps, we'll notice here that we do have a daily fair value gap getting us up into this daily value of the level above that we talked about, 21,173. So keep that in mind as far as the Bitcoin stuff goes there. Jpmorgan CEO feels threatened by disruption in payment system. Kevin O'Leary made his remarks after Diamond declared himself a major skeptic on crypto tokens, which you call currency like Bitcoin, referring to them as decentralized Ponzi scheme. So Jamie Dimon has come out as he didn't like crypto. Now he's really, really freaking out because it's starting to work like we were just talking about. And that's why the government's coming after it. The bankers are coming after it. The Federal Reserve's coming after it. The central banks are coming after it. The world government's coming after it. So in his testimony to the United States Congress last week, still on the panel, O'Leary explained that friction is one of the major problems in the traditional financial system. And plus, it's how banks profit on transaction fees, adding that stablecoins could lead to a reduction in fees throughout the world. He stated, this isn't about speculation on asset price. This is about reducing the fees of how the world's economies work. More transparent, more productive, completely auditable, regulated, but less expensive. So does Jamie Dimon feel threatened? You're damn right he does. And that is a big part of how he makes his money. And regarding the regulatory environment in the US, the venture capitalists explained that sovereign wealth and pension funds are waiting for regulation before adding digital assets to their portfolios. So think about this. When regulation comes out and people with these big major hedge funds can start to invest that big money into the crypto space, there's going to be trillions of dollars that pour in. Right now, they can't do that because it's too risky for people's appetite. So if you're a sovereign wealth fund or a country that is oil rich, perhaps you're generating $250,000 in 12 hours. The only place on earth that you can plot that is the S&P. The only way that you can do that is to be compliant with the SEC rules. They are never going to make a move against the SEC in any way until these rules are determined. And another CEO stepping down here, Genesis director to step down, move into advisory role. On Wednesday, Matthew Ballenswag, managing director of the cryptocurrency broker Genesis, announced via LinkedIn that he was formally leaving his post after over 5 years of tenure. He's also the co-head of sales and trading, as told by Ballenswag. He has been transitioning his core responsibilities to a handful of trusted colleagues who will be taking a frontline role. And he says here, I am forever thankful to both digital currency groups, Genesis partner company, and Genesis for giving me the opportunity to build a capital markets business from the ground up. We built an 8-person company huddled in a small office in New York City back in 2017 to sell side trading behemoth doing billions in volume in multiple currencies daily. U.S. lawmakers propose amending cybersecurity bill to include crypto firms reporting potential threats. United States Senators Marsha Blackburn and Cynthia Lummis have introduced proposed changes to a 2015 bill that would allow voluntary information sharing of cyber threat indicators among cryptocurrency companies. Now, here's another way that they always trick us, the people of the United States, right? They draft a bill and then they, at the last moment, throw in all kinds of this extra BS crap that ends up screwing us over. So we've got to be very careful about this stuff too. According to a draft bill on amending the Cybersecurity Information Sharing Act of 2015, Blackburn and Lummis suggested U.S. lawmakers allow companies involved within distributed ledger technology or digital assets to report network damage, data breaches, ransomware attacks, and related cybersecurity threats to government officials for possible assistance. Should the bill be signed into law, agencies including the Financial Crimes Enforcement Network and the Cybersecurity and Infrastructure Security Agency would issue policies and procedures for crypto firms facing potential cybersecurity risks. The original bill, which was passed in the Senate of 2015, essentially set up a framework of the United States government to coordinate cybersecurity reports from private entities, non-federal government agencies, state, tribal, and local governments, the public, and entities, and recommend possible methods to protect against attacks. Under the proposed amendment, the legislation would be renamed the Cryptocurrency Cybersecurity Information Sharing Act, the CCISA.